What is up, guys? Stas here. Welcome back to another video. So the stock market's been crazy, right? It's been a wild past couple of trading days, and it's probably going to remain like this for the next couple of weeks. That's my personal opinion, and I want to go over the markets today, break down what's been going on as of late when it comes to the S&P 500 and the Nasdaq. And I also, on top of that, of course, guys, like we do every Sunday, I want to break down 10 stocks that I'm keeping an eye on in this week in the stock market. So if you guys find value, hit the like button, subscribe, make sure to go down below, get 2 stocks from WeBull. Those are free, and you could also get into the Discord chat, the Facebook group. Those are also free, and make sure to check out the Patreon if you guys want real-time buy and sell alerts, call-outs, more access to me throughout the day, and if you want exclusive morning videos every single day, that is on Patreon, linked right down below. So let's talk about what happened when it comes to the S&P 500, and it was a very rocky past couple of days, especially on Thursday and Friday. I mean, look, the S&P 500 on Thursday, it ended up hitting a low at 37.23. That is after a drop of over 120 points from 38.40 down to 37.20. Then we ended up seeing a bit of a recovery into the market close on Thursday, and then Friday came around and we got yet again another roller coaster day. We saw a bit of a sell-off in the morning after a gap up in the pre-market, and then at about, what was this, 11:30 a.m. on the East Coast, the S&P went from 37.30 all the way to 38.50, gaining over 100 points. That's about 2.5–3% roughly, right? More on the 3% side. And we ended up closing on that upswing. Now, a question comes up, and we actually called out a bull trap a couple of trading days ago. You guys remember that. We called out this last bull trap. The question here is this a bull trap? What just happened? Is this a bull trap? And I think it very well could be, but I think we might see a little bit more upside before determining whether or not it is a bull trap or not. And by that I mean I think the S&P could see a bit more upside to probably the higher 3800s, maybe 3890, 3900, maybe even 3910. And then once we get up in this area right around the resistance, as you guys can see by the 180 SMA on this hourly chart and by this trend line, that's going to be the moment of truth of, are we going to break out, which would be obviously good for the bulls, or are we going to get rejected there and have yet again and see yet again another bull trap? So yeah, this very well could be a bull trap, but before we get to determine that, there might be a little bit more upside. And when you guys are watching this video, go look at the futures market. Is the futures market green? Is it red? Drop me a comment down below. At this point when I'm filming, the futures market is not open. In fact, I'm filming this video on Saturday, which I never really do. So yeah, check the futures out. If they're gapping up, that means, yeah, there might be a little bit more juice left in the market. But if we're seeing a big dump off, hey, this might already be the bull trap, and we might just go and push for the lows again. And let's quickly take a look at the Nasdaq. And by the way, guys, quickly before we do that, the S&P from the closing price on Friday up to the all-time high, it's no joke, it's not even down 3%. That's crazy to say, but on the flip side, the Nasdaq 100, the NDX, is down. It was down 10% at one point, but now it closed down about 8.6% from the all-time high. So this was actually in correction territory on Friday. Remember, when an index, a stock, an ETF, whenever these go down 10% from their peak, that is considered correction, a correction zone, right? And whenever it goes down 20+% from the peak, that is what's considered a bear market. So we got into correction, territory on Friday when it comes to the Nasdaq 100, and you guys are seeing very similar price action compared to what we just saw when it comes to the S&P 500, right? You guys can see we saw a relief rally on Friday, but we're still not out of the woods. We're still under the 50 SMA, the 180 SMA here on the hourly chart, and I'd argue this looks even more bearish than the S&P technicals. I don't even think the Nasdaq has any more room to go. It might run to the 50 SMA, maybe another 100, 200 points higher from where we are now, but that could be where the bull trap occurs on the Nasdaq 100. And let's say the 50 breaks here, the 50 SMA, we might see, short term, in the short term, we might see a push towards 13K, maybe low 13,000s. I wouldn't be surprised if that were to happen, and that would be another key test for the downtrend. So by no stretch of the imagination is the Nasdaq 100 out of the woods yet. It's still very much in a downtrend. Same exact thing again with the S&P 500. So we must keep an eye on the futures market, what the large caps are doing Monday morning pre-market. And let me say this, just because the futures market, let's say it's red on Sunday night or green on Sunday night, it doesn't mean that's what it's going to be on Monday morning, right? It could very well flip-flop. So it's more important to keep an eye on what's going on Monday morning, but I always keep an eye on the future Sunday night as well. So let me know your thoughts down below, and if you guys are enjoying this video, make sure to hit that like button and subscribe to the channel. Both of those really help me out, and it really boosts me up in that YouTube algorithm and pushes my content out to other people, and I really do appreciate it if you guys do hit the like button and comment down below and subscribe. The engagement means the world to me, guys. So let's just quickly now talk about a bunch of stocks. I have 10 stocks here. A lot of these are reporting earnings, and many of these are, I don't want to call them hype stocks. There's not really any hype stocks in here, maybe one or two, but a lot of these are higher growth stocks. We'll put them in that category, right? One of them, the first one I'm watching, which I made money on this one recently, and you guys on Patreon get all my buy and sell alerts, right, real time. You guys remember Skillz, SKLZ, is one that we made some money on. I believe from 32 bucks is where I called it out in there, and it spiked up to the mid 30s. Made some money on that move, and obviously it's sold off since then. As the markets in general, they've been getting slammed, and now we see Skillz, they're reporting earnings on the 10th. So what is that? Today's the 6th when I'm filming this. Sunday's the 7th, Monday's the 8th, Tuesday's the 9th, and Wednesday's the 10th. So we're seeing Skillz, they are reporting on Wednesday. And when it comes to the technicals here, it is very clear that we're still in a downtrend, right? On the 4-hour chart, you can see that we broke under this $30 level of support. Now it's obviously a resistance right around, 30 bucks, 29.80. That was the high from back in the middle towards the end of January. Now we're trading at about 27.45. We went down 3% on Friday. And if I zoom in on this hourly, again, you guys can see the downtrend is still intact in the past, couple of trading weeks here. And I'm not going to rush into Skillz until they report earnings, right? I'm going to wait until after they report earnings on this one, and until they break out of these moving average resistance points, and especially 30 bucks. 30 bucks is such a key level, and I think if 31, 32 could start to, break, we see some momentum out of those points, that's even better. So Skillz, I think there's a lot of potential. Maybe, I don't know if we touch 46. That's the all-time high. We saw a bunch of massive moves to get to that 46 level. I'm not sure if we get back there, but I think if 30 could break, mid-30s is where we could be going, maybe even high 30s. That's not out of the question in my opinion. So that is Skillz, ticker symbol SKLZ. And again, we made some money with that one recently. And one that I'm currently holding is Tattooed Chef, ticker symbol TTCF. They are also reporting earnings on the 10th, so that is on Wednesday. And what I'm looking at here, especially if you pull back to the yearly chart, is we see a lot of resistance at 27.28. Let's just call it the upper 20s, right? That's the overall resistance on Tattooed Chef, and we can see that we're actually uptrending still despite getting rejected at 27.28. Look, we held the $14, $15 uptrend right here. We held a higher low back in the beginning of December. And as of now, we're holding the next high or low point. Potentially, if we break out of it, that would confirm it, obviously. But as of now, we haven't broken out yet. But I'm looking to see if we do that. We're holding that $18 to $19 level. So I think if this could hold 18, 19, we break 20. 20 is another big point on Tattooed Chef. That was the resistance. That was the high point back in June, right around $20-ish. So I think if the uptrend holds at 18, 19, we break 20, again, that high from back in June, I can see Tattooed Chef, especially if we break 21 as well. That's another big point. If 20 and 21 break, I'm thinking mid-20s, high 20s, easily is where we're going, because that would be the next overall gap to fill. I mean, again, $21 to 27, there's not many resistance points between that. I mean, you could argue that 25 is a big resistance as well. So I guess you can say, okay, 21 to 25 bucks, that's the first gap of about 15 points, percentage points rather. And if 27, if it gets to 27, that means it has over 20% upside from where it is right now. We're talking maybe even 25% upside. So Tattooed Chef is a higher growth name. I like it. I own long-term shares. I own a swing position in this, and I'm looking to add more to it. And Rocket, RKT, is another one that we made some pretty good money on, and I would have made so much more money, a disgusting amount of money if I held it, because, guys, let me tell you this. I was in Rocket, and I posted this on Patreon as well. We were talking about on that Patreon post when it was at about 18, 19, 20 bucks. I told you guys I picked up shares at $20.95. We were talking about how it had 35% short interest at that point, and I ended up locking in the profit on the first pump. I got in again at $20.95, and if you guys remember, Rocket had a good day. I believe it was on that Friday, right? It had a pretty good day. It got to about 24 bucks pre-market, so I was up a good amount that day, and I ended up selling off, I believe, in the high 22s, and I didn't hold for this massive push. That's why I'm saying I could have made so much more money, but it's okay. I mean, you have to roll with the punches. That's how the stock market goes, and you have to just focus on the next opportunity. Don't chase anything like this. I didn't chase it because I very well could have, because I locked in profits early. I could have got emotional and gotten back in, but I didn't. You know, I consider myself a little bit more seasoned, and now I have, a better emotional control than I used to, and that's just how it goes, guys. And I didn't get back in, but now we're seeing the pullback, and now I'm looking to maybe get back in. It's not back down to my original price, which was around $20.95. You might as well call it $21. We're at $25 now. We're not quite down to 21, but I'm thinking if we get back to 20, 21, I'm going to buy more of this. I'm just going to get right back into it, and maybe here at 25, because, guys, look, I didn't hold through my original thesis before, right? It had a high short interest. I didn't know when there was going to be a short squeeze. I didn't know it was going to be that soon, or else I would have held it, but I knew that there was likely going to be one, and that's why that's a reason. That's not the whole reason why I got into the trade originally, but that was a reason, one of them, that I was looking at it, and it panned out, and I didn't hold through my thesis, and now that we're back down, it's kind of like a second chance, because the short interest is still 35% according to highshortinterest.com. So yeah, it's down from 50 bucks to about 25. If it gets down to 20, $21, maybe even in the high teens again, I'm going to get right back into Rocket, maybe for another move. But even if it doesn't see a ridiculous short squeeze, I mean, I like the stock at 18, 20, $22 anyway. I mean, I think this stock should be a higher 20, even low $30 stock. So I like it at that price anyway. The chance of it short squeezing is kind of like the cherry on top, if you guys get what I mean. So that's RKT. Xpev is another one. This is one of the 3 Chinese EV makers that I personally, keep an eye on. I don't really track Li Auto and Xpev too much. I own NIO, so I do track that one. And I am trying to track Xpev and Li a bit more since I do own NIO and I want to know the competition a little bit better. But we can see here Xpev went down from $51 to $25. So this one's down 50% in the past couple of weeks. And if we look on this 4-hour chart, it's even worse than that. The stock's down 65% from its all-time high. And they report earnings here, what is it, on Monday. So that's on the 8th of March. And guys, by no means am I looking to get into this before earnings. There's no way. In fact, even after earnings, I might not get into it because the downtrend is looking ugly. I mean, the chart in general is a pretty ugly chart. This is nothing that I would look at and want to get in. But since, again, it's NIO's competition, I want to track these companies more. I'm going to be tracking it regardless. And, hey, maybe we could get a short-term pop on some decent earnings. And NIO had pretty decent earnings, right? Li, I forget their earnings, but I think they were decent as well. We'll see if the overall market does end up coming back. That might have, a positive effect on these different stocks. So Xpev is one worth watching. It's not on the high priority list by any means, but I'm just keeping an eye on it, right? That's ticker symbol XPEV. The next one is good old JD.com, ticker symbol JD. Yet again, another Chinese company, and this is a chart that, unlike Xpev, this chart looks a lot better. We hit a high at 108. Now we're trading in the low 90s. We're down about almost 20%, so we're almost in a bear market. And they report earnings, on the 11th. So on Tuesday, or that's not Tuesday, I'm wrong on that. That's actually on Thursday. So yeah, completely wrong on that. They're on the 11th of this upcoming week, right? And if they do well, if the markets in general bounce back, I think that's going to have a healthy effect on JD.com stock. And I think overall, if the uptrend holds as well in the low 90s, I can see this being a mid-$90 to a high $90 stock. And especially if they do well with earnings, guidance is looking solid. I'm very interested in terms of what JD is going to do. You guys can see here they did 35 cents in the previous quarter, 28 cents in the quarter before that. So we will see what they do this upcoming quarter. And yeah, maybe we get similar moves to what we saw previously with their previous earnings report. You can see 2 earnings reports ago, after they reported, the stock went from $62 to $90, and the one before that, it looks like it went from $80 to about $100, back down to $85, coasted back into the low 80s a little bit. Then it ultimately got to 95, 100, 105. So we'll see what this report looks like. And again, if this uptrend holds on this 4-hour chart. And Nvidia is another one that is in a horizontal channel. The way I'm looking at it here, of course, there's a lot of other levels within this overall channel that we need to look at. 555 being one of them, right? What's this one? 507, a 510 being another one. So there are some levels within the overall horizontal channel, but what we can see is resistance is at about 600, 610, right? We have support being at about 480, 485, 475 even, right around that general area. And then we have the major levels within the channel being support at 510 and resistance at about 555. So you guys can see Nvidia held about $500 after market hours on Friday. And now we're seeing that 510 level start to approach. So I think Nvidia, if it could break 510, being that support from pretty much all of the latter half of 2020, I think if 510 breaks, we might have a chance towards the 550s, anywhere from 545 to about 550. So that's kind of what I'm watching here on Nvidia. It's so beaten down. I mean, it's in a bear market at this point. It's right on the cusp of a bear market. So I like Nvidia as a bounce back if the markets overall see, a healthy bounce back week. We very well might not get that. Like I said, it could be a bull trap. So we have to see what Monday morning everything's looking like. But again, watch 510 on Nvidia. That is such a big level. Another one here is Square, ticker symbol SQ, which is also holding an uptrend. This kind of looks like the JD chart. It's kind of scary. It looks identical. Holy crap, guys. Look at the JD chart. Don't even look at the ticker. Just look at the chart for JD, then look at Square right now. It's literally the same chart pretty much. Square's holding the uptrend by the looks of it. We got to the low 200s. Was it high 190s last week? Yeah, I think we did. Yeah, low 190s. Wow, 191 is where we got to when it comes to Square. And now, again, we recovered over 200. Now we're hovering at about 215. It looks like the uptrend's intact overall. This could be a higher low here. And I see a big level of resistance coming up on Square. That is the low point. Low 220s, that's the low point from the end of February. So I think if 220, 221, 222 even could break on Square, watch out because 240 is probably where it's headed. That's the double top resistance from back in the end of 2020 heading into the beginning of 2021. So yeah, if 220 breaks, 225 breaks, 240, 245 is where I think it is going. And they do not report earnings. They recently reported earnings a couple weeks ago, or actually about 2 weeks ago. So yeah, check out Square. And another one I'm watching is DocuSign. This one is down to about 205. It broke this uptrend. You guys can see here, I was watching this potential ascending triangle that was forming. It obviously broke now because the uptrend broke, right? We're not holding the uptrend anymore. Now we're trading at about 200, and I think this still is a falling knife. We have to be careful with it, especially if it goes under 190, even 200 bucks. I mean, look, 190, it held back in July, back in August, back in September. 190 was the low. I mean, we didn't get under that point. And even back in October and November as well. So I think the fact that we're holding 190, 200 right now, that's a pretty good sign. So I would look for a rebound. Honestly, this is a pretty decent bounce back move right here. I think we could get to about 220. Look, 220 was the support from back in December, early January, late January, late February. 220 was support. Now we obviously broke 220, making it resistance. So if we see a bit of a rebound, 220 I think is where DocuSign could be going, and that's about 6 to 8% higher from where we are right now. And they report earnings here on the 11th of March. So watch out for DocuSign, ticker symbol DOCU. Ulta is another one, which, if you guys remember, this is one of those stocks that I was talking about a bunch during the pits of the CV, right? Months ago. It might have even been a year ago, even before that, right? Back when Ulta was just getting crushed, when it was in the low to mid hundreds, even high hundreds, low 200s. I was talking a lot about Ulta, and now it's at 330. Let me know in the comments if you guys remember me going over Ulta a lot. I haven't talked about it as of late, but now as we're seeing the recovery stocks, and we've seen this trend for the past couple of months occur, as these stocks have been doing well, Ulta has been doing well as well, and they report earnings here on the 11th, which is what? Thursday, and now we're seeing a bit of a pop. We've obviously been uptrending, but on Thursday we saw a sell-off from 343 down to about 317. That opened up a 7-8% window there, and on Friday we got a rebound. We went up 3%, up about $9. And you might argue, Stas, there's not that much left in this trade. You're kind of chasing it. And I get your argument there. That's a good point. But I think there could be a little more juice left in this trade. I think we could take the highs out, maybe push for 350. I think that's possible before earnings here on the 11th. Maybe into earnings we see a big move. But I do agree. I could be chasing it a bit, and this might very well go down to the low 300s, high 290s, which honestly, now that I'm looking at it, I wouldn't mind that. That'd be a decent spot right around the 180 SMA here on the 4-hour chart. So Ulta is very well worth watching. It's up. It went up 3% on Friday. Earnings are coming up. It's been crushing it as of late. So yeah, that's ticker symbol ULTA. And the last one, which is arguably the most hypey stock of this list, I mean, it probably is the most hypey stock of the list. It is AMC, ticker symbol AMC, and I can't even remember the last time that I've been to. Actually, no, that's wrong. I did end up going to the movie theater. It was during Christmas time, actually. And I don't know if you guys know this, but you can buy out the whole movie theater for $100, and you could bring in it's not as many people obviously as you want. There's a cap, there's a limit, but when I went with like 15, 20 people. We all bought a movie theater out, and it was pretty fun. I think we watched the Grinch with Jim Carrey. It was a throwback movie, but it was fun. We went for $100, and that's kind of a little side tangent there. Check that out if you guys do have an AMC in your area. I'm not sure if they're still doing that, but either way, guys, I'm watching AMC, and I was trying to find out what the short interest is on this guy, but I couldn't find out. And I was looking at it on highshortinterest.com. It wasn't even listed there. So the short interest might be super low on AMC right now. Let me know in the comments what you guys think. But yeah, it looks like we saw a pop on, what was that? The 24th of February. Then we ended up seeing a bit of a sell-off from $11, $12 down to about $8. Now that's where we're hovering right now. So I'm looking at AMC. I wouldn't really put any crazy amount of money in this one, but as more of a gamble, kind of play money stock, I'm looking at it, right? If we break this wedge on the hourly, who's to say it can't go back up to $9, $10, $11, $12? I think it could easily do that. So I'm watching this one, ticker symbol AMC. Earnings are coming out on the 10th. And let me know, have you guys rented out the movie theater for $100? It's not that bad, especially if you split it with some people. It's interesting. Let me know your thoughts on that down below in the comments, and any thoughts you guys had throughout the video, let me know them down below in the comments, and make sure to hit the like button and subscribe to the channel. Again, that really helps me out in the YouTube algorithm, and it shows me that you guys like the content and you want more of this type of content. Don't forget to also get 2 stocks from WeBull. Those are valued up to $1,600. All you have to do is deposit $100 using my link, and we both get 2 free stocks. And you could also check out my Patreon for real-time buy and sell alerts, real-time call-outs, morning update videos, and if you guys want real-time access to me throughout the trading day, I'm doing that on Patreon. Link down below. Check it out if you guys want to. There's a bunch of value in there. I'll catch you all in the next video. Thanks for watching. As always, keep crushing the markets, guys. Stay safe out there. Peace out.